This is the Friday, June 19, 2020 version of the Market Plus segment. Joining us now, Ted Seifried. Hi, Ted.
Hi, Paul. Thanks for having me. How's it going?
You know, I got to say, let's give a little admission of what's going on. We have some COVID situations that prompted us to do a little bit of an audible with our production. So henceforth, you are there. I am here. I hope my wife doesn't get too mad at me. She said that my background had been too cluttered, so I reduced it. This is a picture that was something that we pledged at Iowa PBS for a view above Iowa. So that's the Iowa Capitol, and then a truck from
Very
the
nice.
time before. And Mark Pearson's bobblehead's there, and you're in a hotel room.
Yes, I am. And this behind me is apparently a local bike trail here in Des Moines or nearby.
Oh, it's the High Trestle Trail. Now I see it. Okay. This whole virus thing has impacted the economy. We saw retail sales jump 17.7%. People were going back out to shop, but now all of a sudden, we talked about it a little bit during the show. There's some reemergence of the virus in some of these warmer areas. In general, what's the virus doing to commodities now? Anything?
That's a very deep and complex question. I think the first way that we're going to start with that is, what is it doing for the stock market? And while you had a little bit of trepidation here this week, for the most part, that stock market has come roaring back off of lows. Now, personally, I don't know if I really trust that. You still have a lot of people out of work, and you can throw as much stimulus at the economy as you want, but with people not working, people unsure about their futures, I think we're on some fairly shaky ground as far as the stock market's concerned. But, you know, investors, when they see the stock market in particular start to bounce back, they're going to run after it, chase it, say, hey, you know, I missed it. Now I got to chase it, and it is what it is. As far as commodities are concerned, you know, you look at crude oil, which is up 300 something percent. You know, we had the initial lockdown where we just stopped driving. Well, traffic has gotten pretty bad around Chicago. We are driving around again. I don't know where everybody's going, to be honest, but we are driving again. As far as corn, as far as soybeans, it really never had that big of an impact in the first place because, you know, we're still feeding animals. And while we did have plant shutdowns, well, that just meant instead of growth rations, we're going to maintenance rations. We're still feeding, we're still crushing, we're still exporting, at least soybeans. Corn is a struggle. But yeah, you know, I really don't think it has a profound effect on commodities specifically. At least that's not the perception right now.
Mm-hmm.
If this gets worse again, that could change. But as I was saying earlier, I have the unpopular opinion that the recent spike in cases that we've seen from COVID is actually a really good thing because of the timing of it. We wanted to flatten the curve so we didn't overrun the hospitals. We turned the third largest convention center in the world, in the McCormick Center in Chicago, into a COVID overflow emergency unit. 3 people have ever gone there. And it wasn't because we had hospitals overflowing, it's because we had to test it out. Now the politicians are bickering about who's going to pay to take it down. So we flatten the curve. If we're going to fight this thing as a country, as a nation, we should do it during the summer months when we all as individuals have a better chance of beating it. And as a whole, we have less of a chance of overrunning hospitals that are already dealing with flu victims or flu patients, which, by the way, the last flu season killed 61,000 people. That is an issue. We don't want to have those occurring at the same time. So now is the time. In a lot of these counties that I have people in, people that I talk to, you know, these cases are up, but it's not necessarily that they are concerned, like, you know, major hospitalizations, people are fighting for their lives. A lot of them are people that have it that barely have symptoms of it. So again, unpopular opinion.
Right.
I think the spike in cases that we're seeing right now in June is a positive thing for our country as a whole.
Okay. I need to answer some questions that come in via Facebook and Twitter. And I also have a surprise. You have a surprise in a moment,
Oh.
but that kind of just gives it away, I think, right now, what we're doing. Cotton wise, China has been the fundamental push. Is there technical things in play?
Yeah, well, and so also fundamentally, there is some dry spots throughout the country. Western Plains, we're looking at the Eastern Seaboard a little bit as being maybe slightly concerning. So that could play into it, although we're not to the point where I think we really have a big issue yet. We're going to be eyeing that. We've run smack dab into the 100-day moving average. That has been a formidable foe here for the past 2 weeks. We've hit it maybe 7 or 8 times, not being able to clear it to the upside, but we really haven't backed off of it either. To me, it feels like cotton is coiling to try to make a push higher. But it would be nice to get some sort of fundamental spark, say a great sale to China or something like that, to push us up and over. But to me, that cotton chart looks good. December cotton 59.80. I'm seeing 66 to 69, somewhere in that range.
Okay. All right. Craig in Minnesota is asking, will the June ending stocks report be a market mover for either corn or soybeans?
June ending stocks. What I'm assuming is that is the June planted acreage and quarterly grain stocks report. Quarterly grain stocks could be a big mover for corn or soybeans if we miss it. As analysts, if we miss it by a long shot, then it can definitely be a big mover. We haven't put together our guesses for that. I'm working on that right now. We'll be submitting those next week, as will all the other analysts that contribute to those polls. So I hesitate to really answer that question until I see what the average trade guesses are. But I will say this. Corn is the one that I'm really curious about because, we know we lost a lot of corn demand for ethanol. The USDA, to this point, has been kind of guessing on that. This will give us a very solid idea of what that actually is. So I think we'll be expecting a really rather big and bearish number for corn. The surprise to me would probably be that maybe it isn't as bad.
Okay.
But like I said, without knowing the average trade guesses, it's really hard to make a guesstimate on what we'll see as far as the market's concerned.
I've asked you one political question. I might as well ask you another one. Phil in Dresden, Ontario is asking,
Hi, Phil.
are stage 1 soybean commitments from China going to happen this year? We did talk about that a little bit in the program. As in, are soybeans, are U.S. soybeans on the cheap side of global prices? Or do we see China waiting until November 4th? That's a presidential election response question.
Yep. I think you got 3 different questions there, Phil. For one, there's some I guess miscommunication or about what we mean by the first year. It seems to me that a lot of us wanted that to mean the marketing year that ends September 1st, corn and soybean marketing year that ends September 1st. It doesn't seem like, listening to Lighthizer talk the other day, it sounds more like calendar year, right? And so I think if we look at it from a calendar year perspective, which just makes things kind of awkward when we look at balance sheets and things like that. But when we look at things from a calendar year perspective, China has really started to pick things up lately, and they could potentially hit that 36.2 or whatever billion dollars in U.S. agricultural goods by the end of December, if they continue to really snowball these purchases that they've started recently. I think really what we should be looking at, and what I believe the market is now looking at, is the new crop sales. We have a fair amount of sales on the book for new crop. If China, and talking soybeans, if China does start aggressively buying soybeans, I'm going to say that the USDA's number for export is really low. I would actually say it's maybe too low already. And if that's the case, and we're only looking at a 395 million bushel carryover with the trend line yield right now, we could have a situation where we easily run out of soybeans and have to price ration exports. We might have to price ration our exports to China. Now, that might actually be a good thing for China, because to hit the higher dollar amounts, it would probably help them to have prices at soybean prices $2 higher. Personally, if I'm China and I see this scenario, I think, hey, it'd be great for me to come in and buy the board, i.e. hedge my future purchases at $8.60 November beans, or $8.80 November beans. As I'm buying, start buying some cash, let the market rally $1.20. I take the hedge and I pay higher dollar amounts, therefore pushing myself closer to that bigger, commitment that I have for development. I see an opportunity there. And I'm not exactly sure why China hasn't really done that. Maybe it is in their plans. Maybe they're waiting for the right timing of it. But that would just make a ton of sense for me. If anybody has any ideas on that, by the way, tweet at me at the Ted Spread. I'd love to hear that.
And I'm sure you will. We usually get some responses about that. I have another political question I could get into, but I do have one more here. Brian and Keystone's asking, Ted, do we store corn or soybeans this fall?
Do we store? Okay, so are we going to try to? A lot of guys last year were bagging corn, bagging beans, but we do that every year. You know, it really comes back to how you've marketed, right? I mean, if you've been making new crop sales and you've got December 20 corn sold at 380 plus, no, take it to town, right? But for things that you haven't sold, I mean, a lot of that's going to depend on where we are at harvest or what opportunities that we get between now and harvest. I mean, if we do get a chance to sell 385 corn between now and November, take it and bring it to town. But yeah, if we don't get that chance to sell higher prices, storing, yes, we're going to be looking at that. And I'm not saying that's the right thing to do. I'm just saying that's what we will be doing, because that's generally speaking what we do. I think we're going to get a good chance to sell some higher priced soybeans during the marketing year. And hopefully that will give us a chance to sell some corn at better prices too.
Oh, sell corn. That reminds me. We have one more thing we have to do. You brought something with you on your trip. Are you bullish at all about corn? You kind of were during the show. Are you bullish enough to put a hat on?
I think we can see some fun short covering happen. And by the way, this is the COVID corn hat. It is corn, right? But it's, you know, it's masked up. I only have one of them. We have to keep it safe. Oh, you know what? I'm in a hotel room. It's fine. There we go. But for the flight, you know, we got to do the back.
Right.
I'm bullish we can see some short covering in corn. I'm not necessarily bullish the fundamentals that we have. I don't think we're going to lose enough acres in corn. I don't think we're going to come far enough off the trend line yield. And I don't think we're going to have a huge surge in demand in order to get us to a tight situation on the corn balance sheet. I do think it's going to be better than what the USDA is currently looking at right now, as long as something catastrophic doesn't happen, like we've seen catastrophic events happen time after time after time, again, over the past few years, short of another black swan, a whole flock of black swans. I do think that corn balance sheet's going to end up better than what we're looking at right now. But I don't know if it's going to be to the point where we need to talk about 450 corn, things like that. That story for me is in the soybeans, but I don't have a soybean hat, Paul. So
I know, not yet.
Yeah,
but if you know how to get one, tweet at him and tell him it's in the mail. He'll send you his address.
Also that, yes. Yes.
All right, Ted
no
Seifried.
cheesehead hats. I believe that's to Naomi. That's not for me.
There's territories carved out. I get it. Totally get it.
Yeah. And also go Bears.
Exactly. All right, Ted, thank you so much. Appreciate it.
Pleasure's always mine, Paul. You take care.
All right, you too. That'll do it for Market Plus. That's Ted Seifried, and thanks for watching and bearing with us here on these ever-evolving changes. Next week, we're going to be talking about the carbon market and how it's entering into the commodities, and Tom Fitzenmeyer. We'll see what kind of hat he wears and where he joins us from. For all of us here at Market to Market, have a great week.